Hello and welcome to India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking this evening. The Indian rupee sinks to a record low for the seventh straight session due to sustained dollar buying by oil marketing companies. Sensex and Nifty end flat after a range-bound session with thin volumes. India's mutual fund industry is wrapping up an action-packed 2024. Money raised by new fund offers hits a record high. Sectoral and thematic funds receive the highest inflows. Asset quality of banks improves in the first 6 months of this financial year as bad loans remain below their lowest level in 13 years. An RBI report also shows banks managed to report profit growth for the 6th straight year. The government pencils in FY25 growth at around 6.5% against the earlier range of 6.5 to 7%. Finance Ministry report says RBI's monetary policy stance and low corporate hirings and compensations may have led to the demand slowdown. Adds FY26 outlook looks bright, but India must brace for new global uncertainties. Associations representing India's exports industry meet Finance Minister Nirmala Sitharaman ahead of the budget. NASSCOM bats for lighter taxation for global capability centres, while the trade promotion body wants the interest equalisation scheme to continue for the next 3 years. India's engineering exports body bats for more exposure for the MSME sector. Tata Group Chairman N. Chandrasekaran is looking forward to 2025 with hope and optimism, says the conglomerate will add 5 lakh employees in the next 5 years in a New Year message to the workforce. 38 people are killed after an Azerbaijan Airlines plane travelling from Baku to Chechnya crashes in Kazakhstan. 29 people survived the crash. Reuters reports that the crash occurred shortly after drone strikes hit southern Russia. Russia launches missile and drone attacks targeting Ukraine's energy infrastructure. Ukraine's Zelensky terms the attack on Christmas Day as inhumane. Ukraine claims to have shot down nearly 20 drones. Dozens killed in Israeli attacks, including 5 journalists in central Gaza when their vehicle was attacked at a refugee camp. Doctors say 3 Palestinian babies have died due to hypothermia in southern Gaza as temperatures plummet. Also on the show, Tamil Nadu's Nagapattinam remembers the nightmare. 20 years since history's deadliest tsunami unleashed towering waves that ravaged regions across 15 countries. Let's start with action from the money markets. The Indian rupee continued to plumb new depths as it weakened to yet another record low in today's trade. Month-end dollar purchases by importers also put pressure on the currency. The rupee has now hit a record low in 7 consecutive trading sessions. The real effective rate of the rupee has breached 108, which also a record low. Money market traders say RBI is likely provided support to the rupee at 85.27 levels. Now to the stock market. Sensex and Nifty ended flat after a range-bound session. Mid-caps and bank stocks were also flat. Volumes remain thin thanks to year-end holidays. The December F&O series wrapped up today with Nifty posting losses. This is the 3rd consecutive series where indices have ended in the red for the first time in 21 months. As we approach the end of the 2024 calendar year, it's time to look back at the performance of India's mutual fund industry. It was an action-packed year for the sector, with its assets surging by a whopping 17 lakh crore rupees. New fund offers provided the cherry on the cake. Money raised via NFOs hit a record high this year. Sonal Bhutra gets us a snapshot of what has been a magnificent year for the mutual fund industry.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November, and we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we've seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we've seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
The RBI's annual report on the banking sector has revealed that the asset quality of banks improved in FY24 as gross bad loan ratio fell to a 13-year low of 2.7%. As of the end of the first 6 months of FY25, the ratio has dipped further to 2.5%. Now, as per the report, banks recorded profit growth for the 6th consecutive year in FY24, and that momentum continued in the first half of FY25 as well. The report also said that banks and NBFCs are very well capitalized. The capital to risk assets ratio of scheduled commercial banks stood at 16.8%, well above the stipulated norm. Moving on, the Finance Ministry's monthly economic report says that the economy is expected to grow at around 6.5% in FY25. That's a bit of a departure from the earlier range of 6.5 to 7%. It also says that the RBI's monetary policy stance may have contributed to a demand slowdown in the first half of this year. CNBC TV18 Sapna Das is joining us more. Sapna, give us a sense of the importance of this monthly economic report and some of the key findings.
Well, absolutely. The November monthly economic report by the Finance Ministry is crucial. It has touched upon many important aspects which are extremely topical and also gives us a good bird's eye view of what to expect in FY26. Having said that, very quickly for the current financial year, well, the Q3 numbers are going to be better than what we have seen in H1. There is optimism on that front. That's what the report notes very clearly. But it also says that, it has also repenciled the FY25 growth at around 6.5%. I suppose that this is the first time in a written format the government has done that. After what it had said in the economic survey, it had given a growth projection of 6.5 to 7%. However, when they say around 6.5%, it could be also slightly higher than the 6.5% that we're talking about. But, unlikely to touch 7%. At least for now, that indication is very clear. Also looking at the current numbers. So that's one that we need to keep in mind. The second also, they've gone into the reasons why the slowdown in H1 occurred. Of course, there had been a slump in government capex. Private capex was yet to pick up to that extent. So both of them had their own, kind of contributory factor. But it also notes that probably the monetary policy stance and the macroeconomic prudential measures taken by RBI could also have, kind of contributed to the slowdown in H1. Plus, it also talks about low corporate hiring and lower compensations, as the other factor for slowing urban consumption during H1. So I think all of these factors put together, we know why the Q2 number was a growth shocker. And consequently, though the numbers are going to look better in the coming quarter, but it will impact the overall outlook, the growth outlook estimate for the current financial year. That's one. Second, it also talks about, how to anticipate or what can be anticipated in FY26. So it says very clearly that, the economy prospects are bright if you look only at the domestic economy of India. But we need to be aware about the global challenges, and they're going to be few and far in between on that front. Very quickly, one thing I would like to mention is that it talks about the deviation, or rather the change in the path of interest rates that the US has adopted, how it has impacted currencies around the world, including the Indian currency, and also the fact that it creates an uncertainty for the monetary policy authorities here in India as to how they should look at the rate the RBI rate structure down the line over the next couple of quarters. So that's going to be an overhang that needs to be watched out for.
Right. The Indian industry, of course, hoping for a rate cut in February, but the US Fed rate cycle will also be watched very closely, as Sapna is pointing out. Thanks, Sapna, for joining us with that very important update at this hour. Moving on, the government has appointed Arunish Chawla as the new Revenue Secretary. The 1992 batch IS officer has succeeded Sanjay Malhotra, who was appointed as the RBI governor earlier this month. Prior to his appointment, Chawla served as Pharmaceutical Secretary. Amit Agarwal, the CEO of Unique Identification Authority of India, has been tapped to replace him as the new Pharma Secretary. And staying with news from the Finance Ministry, associations representing India's exports industry met Finance Minister Nirmala Sitharaman ahead of the budget on the 1st of February. Shivani Bazaz has all the details.
Well, yes, the Finance Minister Nirmala Sitharaman held the discussions with key industry bodies today, focusing on measures to boost trade, exports and India's global competitiveness. A major point raised was the need for better tax framework for global capability centers and smoother implementation of the advance pricing agreement to support businesses operating internationally. Now, the industry also highlighted the significant opportunity for India in the United States market amid an impending tariff war, suggesting that additional government funding for marketing Indian products in the US could help unlock around $25 billion in export potential over the next 3 years. Now, there were also calls to extend the interest equalization scheme for 3 years to support exporters, while the need for a global shipping line was also emphasized, which could reduce transport costs for India and bring substantial savings. Also, industry bodies also said that the support for MSMEs was crucial. It was another key area which the demands for increasing funding under the Market Access Initiative, the MIA scheme, to help small businesses gain global exposure. Additionally, the industry recommended energy audit allocations to improve efficiency and reduce costs for smaller enterprises.
So there are multiple concerns, but we talked about two major ones. First one is around our global capability centers, what we call GCCs, the ability for them to have better taxation regime, which could be in the ways of safe harbor rules that we do for the taxation. The second one is around advanced pricing agreements. So we wanted some help. It was already announced in the last budget, but we just required the government to implement those schemes in the right way.
We raised the issue that because of the impending tariff war, India has huge opportunity into the US, and we have also gone through a study where we have said that if government provides some little more focus on the marketing of Indian products in the US market, we can get an additional export of around $25 billion in the next 3 years.
Interest subvention was one, because 50% of our exporters are from the MSME sector. So we've asked for interest subvention. We've asked for more money under the MAI scheme for allowing us to carry our exporters abroad for reverse buyer-seller meet. We also had, for energy audit, we needed for the MSME some support. So we've asked for that under the MAI scheme.
And the Finance Minister will regularly meet industry bodies and experts ahead of the union budget to take their suggestions. Shifting focus to the big international story now, 38 people dead after an Azerbaijan Airlines plane traveling from Baku to Chechnya crashed in Kazakhstan. The plane was carrying 62 passengers and 5 crew members. 29 people miraculously survived the crash that was caught on camera. The incident occurred in Kazakhstan after the plane veered hundreds of kilometers off its planned route. Unverified video of the crash appeared to show the plane bursting into flames as it hit the ground. Passengers who are bloodied and bruised could be seen stumbling from a piece of the fuselage that had remained intact. A Reuters report notes that the crash occurred shortly after drone strikes hit southern Russia. The black box was recovered from the wreckage and may provide some clues into the incident as investigations are now underway. In In more international news, Russia launched missile and drone attacks targeting Ukraine's energy infrastructure on Christmas. At least 6 people were wounded. Ukraine's Air Force detected over 180 missiles and drones and intercepted many of them. Ukraine President Zelensky has accused Russia of making a conscious choice and termed the attack as inhumane. US President Joe Biden and British Prime Minister Keir Starmer also condemned the attack. At least 10 people were killed and more than a dozen were injured in Israel's latest airstrikes on Gaza. Hamas and Israel traded blame over their failure to reach a ceasefire agreement. More than 45,000 Palestinians have been killed in the war since it began on October 2023. The UN Agency for Palestine Refugees said that one child was killed every hour in Gaza since the conflict began. Getting you news from the electric vehicle segment. Ola Electric inaugurated 3,200 stores in a single day across India. This is 4 times its existing store count. The company, which came under scrutiny over the last few months over its after-sales services, now has an outlet presence in Tier 1 and Tier 2 cities as well. Sudarshan Kumar has all the details.
Ola Electric was in focus today after company expands its store count to 4,000 with an addition of 3,200 new stores. The positive about these new stores is these stores are co-located with service centers. If you remember, over the past few months, company has been facing service-related issues. Even Consumer Affairs Ministry had served the company show cause notice. And apart from the store additions, company has also launched a beta version of an operating system and has named it Move OS 5. And some of the features this operating system include: first, group navigation, and second is live location sharing. And apart from this, company has made an interesting launch of limited edition of Ola S1 Pro Sona, and as per company, this is launched with real 24-karat gold-plated elements. But apart from these launches, one thing that has been in the focus for Ola is its falling market share. In FY25, in April month, its market share was 52%. And till 2 weeks ago, its market share had fallen to 18%. But in the last 2 weeks, it has made a minor improvement, and currently its market share stands at 20%. In today's trading session, the stock had opened with a gain of 6%, but at the end, it closed with a minor cut.
All right, thanks Sudarshan for joining us. Yes, Ola's falling market share will definitely be a cause of concern for Ola and its investors. As 2024 draws to a close, Tata Group Chairman N. Chandrasekaran has written a note for employees. He said conglomerate will add 5 lakh employees in the next 5 years in a New Year message to the workforce. Yusuf is here with more on Tata Group Chairman's letter to employees.
Tata Group Chairman N. Chandrasekaran is looking forward to 2025 with hope and optimism. In his New Year message to employees, Chandrasekaran said the conglomerate plans to add another 500,000 jobs in the next 5 years. Tata Group, which currently employs more than 1 million people, aims to create another 5 lakh manufacturing jobs in the next 5 years. These jobs will be spread across key sectors such as semiconductors, electric vehicles, solar equipment, and other critical hardware industries. With over 6 lakh employees, TCS is home to about 60% of the group's total workforce. Tata Steel is a distant second with over 78,000 employees. The combined revenue of the group companies surpassed $165 billion in FY24, with a net profit crossing $10 billion mark. There are 26 companies listed on the bourses with a combined market capitalization of $373 billion. In his message, Chandrasekaran touched on the year's geopolitical crisis, including ongoing conflicts in Ukraine, Gaza, and Sudan, and the growing focus on resilience over efficiency in global supply chain. In 2024, stocks of Trent and Indian Hotels rallied the most. The group chairman said, our retail companies continue to scale up, and Indian Hotels Taj brand continues to be the world's strongest hotel brand. Additionally, the group also anticipating numerous jobs in sectors like retail, technology services, aviation, and hospitality. Chandrasekaran said, I quote, I particularly excited by 2 areas where economic opportunity and social progress converge: artificial intelligence and manufacturing, end of quote. Tata Group companies are wrapping up 2024 with over 12% returns. This is higher than the Nifty gain of over 9%.
And coming up on India Business Hour, women-centric schemes are reshaping India's political landscape, but it is coming at the cost of strained state coffers. A special report in just a bit. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram, and JioCinema. Ceremonies are being held across 15 nations in the Indian Ocean to mark 20 years since a deadly tsunami which killed over 2.2 lakh people. A 9.1 magnitude earthquake off the coast of Indonesia triggered a tsunami which devastated large parts of the Indian Ocean. In India, Tamil Nadu's Nagapattinam district was the worst hit, with nearly 6,000 people losing their lives.
Pattanam in southern India is scarred by tragedy. 20 years ago, on December 26, 2004, a magnitude 9.15 earthquake off the coast of Indonesia's Aceh province triggered an Indian Ocean tsunami. Having received no formal warning of the approaching waves, residents were left with no chance to escape. Local resident Ganda lost her husband and son in a split second.
When I hear the word tsunami, my whole body shivers at the thought of my husband and child.
The disaster killed more than 226,000 people in Indonesia, Sri Lanka, India, Thailand, and 9 other countries. About 6,000 people died in Nagapattinam alone. Millions have been spent since to create a vast network of seismic and tsunami information centres. Warning towers have been set up along India's coast, and the government has also put together a robust disaster management and early warning system. Here is Jay Radhakrishnan, a former district collector.
Gave us an opportunity to reflect on what could be done better. There were no escape routes earlier. Buildings were not earthquake resistant or, for that matter, cyclone resistance. So when these were all, and in fact risk insurance was next to nil. So these were all built in during the rebuilding program.
Seaside houses in Nagapattinam have also been moved slightly further inland. Ganda now lives in one of them with her surviving son. Though a much safer and sturdier structure than her previous house, its concrete walls conceal a decades-long hurt and sorrow. We were happily living, me and my husband, along with our children, she says. Now we have a great house, but we are not happy because we lost my husband and child.
2024 saw a flurry of welfare schemes being announced as the country and several states went to polls. Some of these walked a fine line between being handouts and truly welfare-oriented, but they have paid off, politically speaking. On Rewind 2024, CNBC TV 18 Sandhya Gura looks at some of the key welfare schemes of 2024 and reports that with more states heading to polls in the next 2 to 3 years, more such schemes cannot be ruled out.
It's not odd to see a surge in the number of welfare schemes that are born in an election year. But 2024 took this to a whole other level. Not only did the country hold its Lok Sabha elections early this year, people in 8 states came out to choose their state governments. It's not surprising then that this meant new welfare schemes being promised by parties and being launched by incumbent governments. It wasn't just poll-bound states that stepped up their welfare spending. Madhya Pradesh and Tamil Nadu continued their women-centric schemes. Nor were such schemes directed solely at women. In all, 2024 saw over 740 welfare schemes in operation, ranging from free health insurance for weavers to increasing the scope of the midday meal scheme for children in schools, to income support for farmers, to incentivizing rooftop solar panels for electricity generation. Naturally, all these come at a cost. In Maharashtra, for instance, the Ladki Bahin scheme, which promises 1,500 rupees a month to every female resident between the age of 21 and 65 years, is projected to cost the state 46,000 crore rupees. The addition of schemes like these has pushed the state's fiscal deficit beyond 2 lakh crore rupees, taking it above the ceiling of 3% of gross state domestic product. In Himachal Pradesh, meanwhile, populist measures like the old pension scheme and monthly payments to women have left the state struggling to pay government salaries. It has taken drastic measures to tighten the belt, even shutting down government hotels and scrapping old welfare schemes. Karnataka and Rajasthan are also grappling with delayed payments and financial crisis due to their poll promises.
When you are pushing your fisc in, supporting schemes which are not necessarily leading to any productive gain in the economy and also lead to massive disorder in terms of labor market or distortion in terms of labor market, they clearly would not only impact your fiscal in terms of pure skewness, but also will impact the overall productivity of the economy, which will impact the nominal GDP in the medium term, which is the denominator in your fiscal deficit management.
That would really depend on how these freebies, so to say, are getting financed. If it is at the cost of capital expenditure, then that is definitely something that is not very encouraging in the long run. It would have an impact on the state's competitiveness and its potentially its ability to raise revenues in the future.
According to a study by economists, 16 states have together launched over 100 such schemes since 2020, and the cost of 2/3 of these schemes is pegged at 5.1 lakh crore rupees. That's 1.6% of the country's GDP. A separate report by CRISIL says that 11 states in India are set to spend a record 4 lakh crore rupees on welfare schemes. That's 13% of their total expenditure. In contrast, these states are spending only 10 to 11% of total expenditure on education, 6 to 7% on power, 6 to 7% on agriculture, and 4 to 5% on health. This is something N.K. Singh, the chairperson of the 15th Finance Commission, has cautioned against. He called them, and I quote, a passport to fiscal disaster. Experts worry the number and scope of welfare schemes could get worse in 2025, especially as important states like Bihar and Delhi ready for elections.
Many state governments are already grappling with the financial fallout of existing welfare schemes. But these schemes are seen as having borne political fruit in the past. So unless the electoral efficacy of these schemes reduces or political parties find other measures that they feel will work as well as a victory formula, the trend is unlikely to change. It then becomes vital that state governments and political parties strike a balance between welfareism, populism and fiscal discipline. In Mumbai, with camera person Ajay Dabholkar, this is Santya for CNBC TV18.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV18.